Hey everybody, Leon here. Hope you're having a great afternoon. I wanted to take a moment and just talk a little bit about financial wellness as a whole. I've gotten a lot of great comments on my videos, and I realize some of my videos are very product specific, right? Whether you're refinancing your home, you're buying a car, you're trying to figure out what payment to use at the gas station, and just a ton of good content I put out there. But a number of just folks from Facebook have reached out and said, Leon, overall, what is financial wellness, and really how does that apply to my bank and or my credit union? So I wanted to take a moment really just for the average person to talk about financial wellness. So traditionally, you would go to your credit union, your bank, and they would they'd offer your car loan or a credit card or checking account. And most of the time when you walk in there, man, they are pumping out the credit cards and they are trying to get your checking account. And the reason behind that is financial institutions do very well when they're controlling payments. When they have your debit card, their debit card in your hand, every time you swipe that debit card, they're making a little bit of money. It's called interchange. And so one of the things that was a mistake in the past was financial institutions were focused on getting their product and services in your hands so they could make money. And their thought was, they would make a good product and service, they would try to give you good customer service, and that would earn their business. And one of the things that have happened over the years, and if you read Forbes magazine, they said that the average American household does not have $500 in reserve for an emergency. So you think about an auto repair or the heating, the furnace, the air conditioning, something going wrong, the average household doesn't have $500 for that emergency. And we look now, starting like March of this year with coronavirus and people losing their jobs and just all kinds of things going on, there have been a number of things that you needed $500 for and people just didn't have it. So just prior to this, in the last 5 years, I have been working on something that I call the four pillars of financial wellness. And it really relates to a household or an individual. And I'll walk through them a little bit. So the first pillar is household cash flow. And household cash flow really is maximizing every dollar that comes into that home or is in that home, whether it's a job, a full-time job, a part-time job, whatever that might be, some short-term savings that maybe you have on hand. How do you maximize those monies? How do you use those dollars to do the most you possibly can for that household? A lot of times you improve household cash flow through refinancing some kind of loan, right? If you have a mortgage that's $2,000 a month and you can refinance that loan and get it down to $1,500 a month, you can save $500 a month in household cash flow. And that's really important today because most households right now, currently in this pandemic, are spending way more than they bring in. And so if we can improve that household cash flow, very critical. And there's a number of ways to do that. Using the right credit card or debit card that has cash rewards or rewards on things that you might normally buy, believe it or not, is improving household cash flow. How can you bring things into the home that you don't need to spend dollars on is a big part of that. So remember, first thing is household cash flow. How do you improve it? And it's just maximizing every dollar that you possibly can in that home. The second is savings. One of the things back in New Jersey, we had Hurricane Sandy, and we recognized it took about 9 months for the average household to recover from that disaster. So the word nest egg came up. And so the second pillar of financial wellness is savings. It starts with a modest 9 months worth of reserves. It then goes into money markets and CDs, maybe some mutual funds, some long-term 401k, IRA, and retirement. But the beginning of financial wellness really is savings. And so when you take household cash flow, let's go back to that mortgage, and we're able to save $500 a month on that mortgage. Well, what would you look to do to stay within the four pillars rather than just saying goodbye, that's great, is how do we then have some systematic savings? What part of that $500 a month can we put away to build that nest egg? And that's how those pillars kind of roll into each other. Sometimes, though, we find people going to buy a car, it's a $50,000 car, and they don't have $50,000 in savings, right? So the third pillar is protection, right? So there's times where you don't want bad things to happen to you, when circumstances arise. So let's just take the pandemic. There are a number of institutions that when you take out that auto loan, they can adjust the term of that loan to have debt cancellation with basically hitting the same monthly payment you were planning on paying. And here's how that would work. You would take out that auto loan. If you didn't have the $50,000 to pay off the loan, if something happened, you would just adjust that term so you would have protection. If you had that protection during the pandemic and you were laid off of work, that insurance, that debt cancellation, would have covered those payments for you. So we have a number of people right now who, whether it's their mortgage, their consumer debt, their car loan, just a number of things that if when they were purchasing that product, that loan, somebody had financial wellness in mind and took a look at their overall savings and their overall household, they would say, if something was to happen, you're going to lose your car, you're going to lose your house, and they could have had protection in there. So the third pillar is protection. It's not something you want to just do, to over insure yourself. But what you want to do is make sure that until you have that nest egg, until you have that reserve, you need protection so that bad things don't happen to you when life goes on. And the fourth pillar is knowledge, and that's really the most important one. One of the things I see very common is that people have a credit card with Chase, a Bank of America checking account, maybe their auto loan with their credit union. And what's happening is they're getting coaching from 3 or 4 different institutions. And they think they're being smart, right? Because they have a couple of different accounts and that organization is giving them advice or what they think they need to do. But you have to remember, like in any baseball team or football team, there's always one coach, right? The New York Jets or the Giants, they don't have 3 or 4 different coaches. They don't go to different organizations to figure out what their play is going to be. What is their plan? They don't do that. They have one coach, one leader, one person who gives them that advice and they follow it. Now, you can follow many different people's advice and you should look around for the right coach. But that fourth part is very important and it really leads into that whole structure of your financial wellness and how your household is ran. The truth be told, you would probably be better off having one primary financial institution. That institution would have to earn that from you, but it would probably work best when it came to knowledge. And that knowledge goes to seminars, education, and everything you would need in order to keep the first 3 pillars in alignment. I hope that was helpful. Hope that answered many of your questions of what is this thing of financial wellness? Why do you keep talking about it? Why do you keep beating up the financial organizations to make sure that their product and services are aligned within the 4 pillars of financial wellness? One of the things I have done over the last 5 years, I worked at an organization where I took every product and service, whether it's a car loan, insurance, a mortgage, even the customer service, the member experience, the online tools. I aligned each one of those product and service within one of the 4 pillars of financial wellness, and it really helped that organization help its members because it wasn't about selling product. It wasn't about walking in saying you have to get 13 checking accounts for the day. It was about meeting the financial needs, the education, and bringing awareness to that membership when it centers around financial wellness and helping that entire household. So again, hope you had a great day or having a great day, and we'll talk to you real soon.